Hello and welcome to my channel. In today's video, we're going to talk about Bitcoin ETFs. We're going to talk about how institutional money is reshaping crypto in 2025. Let's get it. So when it comes to the crypto market, there are two types of investors. Those who have been here since the beginning and plan to stay for the long term. Hodlers, if you will, and those looking to capitalize on short-term price swings, aka traders. Of course, this isn't mutually exclusive and many people do both. But for the most part, these are two very different types of people. Hodlers tend to be more interested in how much Bitcoin or Ethereum costs over time, whereas traders are more interested in daily or even hourly price action. But there is something coming in 2025 that may just change all of that. So what exactly is a Bitcoin ETF? Well, the acronym stands for Exchange Traded Fund, and as the name suggests, it is a type of investment fund that can be bought and sold on stock markets just like individual stocks. Now, the main difference between a traditional ETF and a Bitcoin ETF is that while a traditional ETF tracks the price of a physical asset like an index, a group of stocks, or even gold, a Bitcoin ETF tracks the price of Bitcoin. It may be helpful to think of it like this. Say you have a friend who is super knowledgeable about the stock market. He has a great track record and you trust his investment decisions. So you ask him to manage your money for you. He does really well, and eventually you make enough money to hire several more people to help him manage all of your money. This is essentially what an ETF is. A fund managed by experts that allows you to pull your money together with other people to invest in a diversified range of assets. In theory, this should allow everyday investors like you and me to gain exposure to the crypto market without having to buy and sell the coins themselves. Sounds pretty straightforward, right? Well, in some countries it is, but in others, the process isn't quite so simple. You see, the United States has yet to approve a physically backed Bitcoin ETF. The closest thing that the US has to a Bitcoin ETF is the Bitcoin Futures ETF. It was launched in October of 2021 and is the first of its kind in the world. It allows investors to gain exposure to Bitcoin without directly holding any. Instead, it buys and sells Bitcoin futures contracts. A futures contract is basically an agreement to buy or sell an asset at a predetermined price on a specific date in the future. This may sound a little confusing, so let me break it down with an example. Let us say you're a coffee shop owner and you're worried about the price of coffee beans going up. So you enter into a futures contract to buy 100 bags of coffee beans in 6 months for $5 a bag. If the price of coffee beans goes up to $7 a bag, then you're locked in to buy them for only $5 a bag. If the price goes down, you still have to pay $5 a bag, but you could theoretically sell your contract for a profit. Now, obviously, this is a simplified example. In reality, there are a lot more variables at play, but you get the idea. By entering into futures contracts, investors can speculate on the future price of an asset without actually having to buy and sell that asset. And this is exactly what a Bitcoin Futures ETF does. It buys and sells Bitcoin futures contracts, allowing investors to gain exposure to the price of Bitcoin without actually buying or selling any. To put it simply, this type of ETF offers indirect exposure to Bitcoin. Now, there are pros and cons to this approach. On the one hand, it allows investors to gain exposure to Bitcoin without having to buy and sell the coin itself. On the other hand, though, it also means that they won't be able to benefit from any price increases to the same extent that direct holders will. Plus, they'll be exposed to counterparty risk, which is the risk that the party you enter into a contract with won't be able to fulfill their end of the bargain. There are also what's known as a physically backed Bitcoin ETF. As the name suggests, this type of ETF holds actual Bitcoin. It buys and sells the coin itself, meaning that investors are exposed to the price of Bitcoin directly. Now, this type of ETF is even more complicated than a Bitcoin Futures ETF, but it offers investors potentially higher returns and less counterparty risk. However, it also comes with its own set of challenges, including how to keep the Bitcoin safe and secure, and how to ensure that the ETF can be easily bought and sold on the open market. Despite these challenges, a number of countries have already approved physically backed Bitcoin ETFs, including Canada, Brazil, and Germany. Now, the United States has yet to follow suit, but it's only a matter of time before it does. According to Bloomberg, almost a dozen applications are waiting for the SEC's decision, and the odds are good that at least a few of them will be approved in the next year or so. And when that happens, it will open the floodgates for institutional money to pour into the crypto market. You see, for all of the excitement surrounding crypto, the truth is that it's still relatively illiquid compared to traditional markets. Most big institutions simply aren't interested in investing in something that can't be easily bought and sold. But that could all change once Bitcoin ETFs become widely available. In fact, some experts believe that the launch of a Bitcoin ETF could bring in billions of dollars in new investments, and I don't think that's a far-fetched prediction. So if you're an investor, you might want to start preparing for this now, because it is only a matter of time before it happens. Now, I personally am a fan of both Bitcoin and Ethereum, so I'm excited about the prospect of more institutional money flowing into the crypto market.